Michael Zuber, one rental at a time. And yes, for those of you out there that are happy fans, here she is. And don't forget, the treat for happy is one thumbs up. So thank you very much for that. Before we get started with the daily financial news, we have 3 people to congratulate. Yes, folks, the one rental at a time community is continuing to do the work, continuing to get good or great deals. So let's congratulate Utek, Basilio, and Ron. Congratulations for doing the work. Your cards will go out this afternoon. Nice work, gentlemen. When I look at the daily financial news, there are lots of things happening. Many of them, as I have shared or expected, which, I don't know, is interesting to see how the dominoes are falling as I've talked to you over the last 45 days or so. First and foremost, where do we want to start? Oh, let's start with this. Something I've read on Real Deal. That is a site that I go to for real estate information. Generally speaking, it is big deals, but it's fun to see what the big boys are doing. So that's one place that I follow that may not be on your normal radar. Again, Real Deal. Looks like Blackstone successfully flipped the Cosmopolitan for $4 billion. Now, I didn't read the article. I don't know if they had partners or how long they were there. I just saw the headline in the picture. Blackstone flips the Cosmo for $4 billion in profit. That is a good day. I got to imagine that's a good day. Other things going on today. The 10-year is racing higher. Just yesterday, we talked about it bouncing above 1.5. Well, today, it's going towards 1.558, what I saw it this morning. These moves may seem small, but when you do it on a percentage basis and realize, excuse me, this is in a 24-hour period, it tells you what is going on. Again, how should I say this? There's more and more scared capital out there, and when money is scared, it kind of races, to the 10-year. And, some of this could be Jerome Powell. Jerome Powell and Janet Yellen are speaking today. Both of them don't have anything good to say. What I mean by that is Janet Yellen is basically saying, we, the Fed, run out of money. Or I'm sorry, the Treasury. Let's get the roles correct. The Treasury runs out of money. It hits the debt limit on October 18th. First off, I'm glad we now have a date. Second, October 18th seems like years away to politicians. So we probably won't see really any movement until the 10th of October. I still believe that 1 trillion idea that I did a live stream on there, I just feel really uneasy that is going to be the loophole that they choose to use. And I believe while they will be lowering the debt limit and I think that will send shockwaves, like huge shockwaves through the financial system if the U.S. government has to rely on a loophole to pay the bills. That would be bad. And of course, we have Jerome Powell. Looks like Jerome Powell is now a viewer of one rental at a time. Jerome Powell is now saying, just like I've been telling you for quite a while now, that inflation is going to last longer than anticipated. Folks, I believe Jerome Powell always knew this. He is, he's not a stupid man, but he also realizes what he has to say to moderate the market, moderate the consumers. He couldn't come out and say, you know what? We have inflation above 5% for 2 years. He just couldn't say that. So he has to say transitory. Now transitory is 6 months long. He's saying it's going to last longer. It is going to last throughout this year, my opinion, next year. And by then, just like the 70s, what most people don't appreciate about the 70s is the consumer. You and me, we started to expect it. And once you expect something, you change your behavior, and it kind of propagates going forward. Wage inflation, rent, food, gas. Yeah, it's all happening right now. And most of that toxic soup has not even hit the official CPI, PPI, or PCE. These are all acronyms for inflation that the Fed watches. It is going to get ugly before it gets better. We got CaseShiller numbers today. Remember, CaseShiller numbers are interesting, but so out of date. The numbers today that came in late September are actually July numbers. And if you've been watching this channel, you know we had a slowdown in July or August, so it'll be interesting to see what next month is. But the numbers for July, the national CaseShiller numbers were 19.7%. I want to remind all those crash callers out there from a year ago, 19.7% is not a crash. Some very hot markets, I bet you can guess. Remember, CaseShiller covers 20. The 3 hottest markets. You know what? While I read the third and the second, guess what the hottest market is. Let's get some participation here. Leave a comment, guess the market. Or if you want, guess the percentage. Seattle comes in at number 3, 25.5% year on year. Only outdone by San Diego at 27.8%. And they were both outdone by a market that was up 32.4%. Folks, it is in the state of Arizona, and yes, it is Phoenix. Wow. Think about that. That's basically 33%. So if you bought a $300,000 home in September of 2020, it is now a $400,000 home. And if you bought that $300,000 home with 10% down, you put $30,000 down, and now you have at least $130K in equity. That, folks, is how you use leverage conservatively. Wow. A couple other things I'm starting to note out there because people keep pointing at the price chart. And if you know anything about this channel, price means nothing, at least in housing. We are now 35% above the 2006 peak. Ooh, scary. Must be close to Halloween. However, we have had 15 years of income appreciation. And, oh, by the way, the interest rates still are half what they were in 2006. So we are still marketably more affordable today than we were in 2006. However, if the 10-year keeps going up and the 30-year follows, that could eventually be a problem. There is no question that a rising interest rate environment will hurt affordability and really could put a damper on housing. Looks like Ford is going to be dropping some serious coin, building some manufacturing plants in the United States. Yes, folks, this is something that I think will be happening a lot over the next several years, is we will bring manufacturing home. I do think that a lot of this manufacturing will be, how should you say, robotic or automated, but nonetheless, automation will be coming home. Ford is dropping $11 billion to build new plants for building EV or electric vehicles. That is a lot of cars. That is a lot of cars. It is funny to watch rates going up, and gold is down. Tech is down. Crypto is down. Again, as rates go up, right, when you borrow, you put on risky bets, these other areas are down. It was interesting to see gold down with crypto, with tech. Pretty interesting stuff. Mastercard has entered the buy now, pay later arena. Folks, this is just the latest version of layaway. It is not a new idea. It is being marketed as such. It is another way to trap you, the American consumer, in the rat race. This is such a horrible idea, but it will take off because consumers like that endorphin rush of buying this or that, and they don't think about how many hours you are selling. Folks, if you want to understand what I mean by this, I have a cheap course at $99 called Get Your Money Right. Please calculate your discretionary money, convert it to a dollar amount, and see what something costs. I have had people do this, and a $100 item means 40 hours of work. Is a $100 item worth a week of your life? The Get Your Money Right course is an underappreciated course of mine. It is about turning price into time, and then asking yourself, is this really a need or want? It has a great exercise I've taken all my experts through called Choices. Yeah, there's something in that. And then lastly, let's talk about China. I believe China is changing fast. Let's talk about Evergrande first, because it's kind of the big domino that started this. It will not be the last. If we learned anything about the real estate crash or the Great Recession in the US, this is a big domino, and it will take others with it. First and foremost, just like I said, the Chinese government is orchestrating piecemeal purchases by Chinese-backed citizens. Again, Evergrande assets are going out to government-backed agencies, just like I said what happened. Another thing that happened in China, China has had some cities, big cities, go unexpectedly dark because of electricity outages. What I don't think the Chinese central government, who thinks they are likely all powerful and never make mistakes, the Chinese consumer, the Chinese citizen, they're getting gut punched over and over. They saw their stock portfolios get hit. Property values are going lower in China, in my opinion. And now you are having citizens have unexpected blackouts, like full-on cities. I suspect that the Chinese consumer is going to retreat, and they are going to have a recession, and it could be nasty. And then finally, China is changing. I think this is going to be bad for U.S. companies who manufacture there. I think of Nike. There are likely hundreds others. Tesla, I think, invests there as well. I do not see U.S. companies doing very well manufacturing in China going forward. There will be a target. I think it will only be worse for U.S. capital. U.S. capital is going to be not treated very well, in my opinion, which is probably okay by the Chinese government. So again, lots of stuff going on today. Make sure, if you want to understand how to turn your discretionary dollars into hours so you can really understand what stuff costs, get the course, Get Your Money Right. It's $99. But also don't forget, I just released a book with 15 conversations with real estate millionaires. You can get that on Amazon along with one rental at a time. So thank you very much for everything, and have a wonderful day. Bye-bye.